Can a veteran and a non-veteran be on a VA home loan together? Hey guys, welcome back. And I believe this is video number 7, I've lost count, on our series of the top 10 things you need to know before you get your VA home loan. And today we're going to talk about what's called a VA joint loan. Hey guys, welcome back. I'm Aaron D. Hart. If you haven't already, please give us a like, give us a subscribe so the almighty algorithm can keep you informed whenever we have new and exciting information that'll come out to help you on your home buying journey. So today I want to talk about a VA joint loan, and that's exactly what it is. A VA joint loan is when you have a veteran and a non-veteran on a VA loan together. There's a lot of myths out there that VA loans are only for veterans, that you can't have a person that's on there with a veteran that's not a veteran on there as well with that. So let's talk about that. I'm going to kind of break it down and go through that. So the first and most common one is you have a veteran who has their VA eligibility and they have a significant other, but they're not legally married yet. It might be a girlfriend or a fiance, or they just haven't made that decision to take the plunge and get married yet. However, we want that other person on there to help for qualification purposes, whether it be extra income, whatever it is, to help out the ratios or to increase the buying power. We can do what's called a VA joint loan, where we're taking the veteran's income and the non-veteran's income and combining them together. Now, here's the big caveat with that. We don't get full entitlement. We're only going to be able to use half of the eligible veteran's entitlement. So with that comes a down payment. And typically after the formula pencils out, it could be anywhere between 12.5% to 14% down payment. Now, a lot of times I'll get asked, well, Aaron, what's the point of that? If you have to put more than 10% down, wouldn't you just want to do a conventional loan? No, not necessarily. Remember, anytime we're doing a conventional loan and we're putting down less than 20%, we're going to have some type of mortgage insurance associated with that loan. VA loans do not have mortgage insurance. So that's one thing to think about in regards when we're doing a VA joint. If a veteran and a person they're going on the loan with are not married, whether it be a girlfriend, fiance, or whatever, that's going to be considered a joint loan. We can also do two veterans that might have eligibility. They could be brothers, they could be cousins, they could be roommates or whatever, that we want to possibly look in doing a VA joint loan with that as well. In that example, we're going to have two separate applications and we're going to have to get two separate certificates of eligibility. And there's a calculation that we have to use on the lending side that's going to determine how much eligibility we get to use from each veteran. Now, the biggest thing with that to keep in mind is we are going to have to qualify on the lower of the two credit scores in regards to what is going to be allowed on the veterans. We also have to include any types of debts with that. Now, here's another caveat to think about that I've wanted to mention is anytime we're in a community property state and we are doing a loan with somebody that is legally married, even if their spouse is not going to be on the loan, so this is what we call a non-purchasing spouse. If we're in a community property state, like I'm in Nevada, which is considered a community property state, we are required by federal law to pull that non-purchasing spouse's credit report. Now, all they're looking for is to see if that spouse has any debt that's only in their name. So I'll give you an example. Let's say we have a veteran and he's got an 800 credit score, everything's great, but his spouse has a car payment that's $500 that's only in her name. We have to count that additional $500 because they're legally married and it's a community property state. We have to count that in the overall debt to income ratio. And if you're not sure what debt to income ratio is, make sure you check out that video here where I go over debt to income ratio and explain that. So in all regards, as you can see, VA loans are a fantastic tool that can be used, and there's a whole bunch of different ways to do it. So if anybody ever tells you like, oh, hey, you want to put your friend on the VA loan with you, you can't use it. That's not true, guys. There's just a calculation that we have to do. We have to get that other person's, information, just like they were applying for a home loan. And there's a calculation that we have to do to determine how much of a down payment would be required if they are not married with that. So I hope that helps. If you have any questions or at all, please feel free to reach out. Give us a like, give us a comment below. Stay tuned. We're going to be coming with more great information out there on the home loan process and VA loans in general. Thanks for watching, everybody. We'll talk to you soon. Take care.